In terms of what's happening, why most people are completely unprepared, and what you could do about this to come out ahead, there is one more shift that could even have a bigger impact than China, and that would be global diversification. Like, here's the reality. Even though Goldman Sachs projects that China overtakes the United States as the world's largest economy by 2035, the real story is the fact that India's population is about to hit 1.5 billion people. It's younger than China's, growing faster, and incredibly tech literate. That's why their forecast is that India becomes the world's third $10 trillion economy by 2036, and eventually they'll get so massive that they rival both the United States and China. On top of that, once you zoom out even further, by 2050, emerging markets are expected to make up nearly half of the global stock market, up from just 27% today, with India alone potentially tripling its share. So in terms of what this means for you, here's where things get interesting. As of right now, the average American investor has about 80% of their money in US markets, like the S&P 500, which made perfect sense for the last 50 plus years when the United States was the fastest growing, most profitable economy on Earth. However, over the last year, every single major institution has updated their 10-year return forecast of the markets. And for the United States, the general consensus was not so great. Like, when it comes to this, Vanguard is projecting US stocks to return just 3.9 to 5.9% annually over the next decade, while international markets are expected to do even better at 4.9 to 6.9%. Or I guess put more simply, the general consensus here is that international markets are going to be outperforming the United States over the next few decades, purely because they have more room to grow and they're starting from a lower baseline. The top 10 companies now make up about 40% of the entire S&P 500, which is a concentration risk that very few people talk about. And a weakening dollar on top of this means that foreign stocks, even if they earn the same amount in local currency, will actually return more to US investors once you convert those back into dollars, if that makes sense. The national debt continues to skyrocket. We're constantly printing more money to pay for things we can't afford. And over time, this is undoubtedly going to weaken the underlying currency that we all use and transact in.